அடுத்தபடியாக உங்களுடைய பேசுவதற்காக தோழர் அமானுல்லா கான். தோழர் அமானுல்லா கான் அறிமுகம் இல்லாத தேவைப்படாத ஒரு தலைவர். நம்மளுடைய காப்பீட்டு துறையிலே எல்ஐசியிலே தோழர் என்எம்எஸ்க்கு அப்புறம் என்எம்எஸ் என்கிற மிகப்பெரிய தலைவருக்கு பின்னால் அந்த தலைமை பொறுப்பை ஏற்று நான் பல அவருடைய பேச்சுக்களை கேட்டு ஆழமான அவருடைய பொருளாதார சிந்தனையை நான் வியந்திருக்கிறேன். அத்தகைய பேச்சாற்றல் மிக்கவர். ஏற்கனவே நமக்கு நன்கு அறிமுகமான தோழர் அமானுல்லா கான். அது மட்டுமல்ல, நம்முடைய முன்னால் நடந்த கருத்தரங்கத்தில் கூட மிக சிறப்பான கருத்துக்களை எடுத்து வைத்து நம்மை சிலிர்க்க வைத்தவர். அந்த வகையிலே உங்கள் முன்னால் இப்பொழுது தோழர் அமானுல்லா கான் அவர்கள் பேசுவார்.
President of this convention, Comrade Savarimuthu, respected member of the parliament who has come here to support our cause, Comrade Amarjit Kaur, General Secretary AITUC, distinguished personalities sitting on the dais, and my dear comrades and friends. I express my gratitude to the organizers of this convention for inviting me and giving me an opportunity to present my views on certain very important subject concerning not just the general insurance employees, but the national movement itself. I am very happy that all the unions and the associations in the general insurance have come together to launch agitation, mobilize public opinion against the government policy that to destroy the general insurance sector. I stand here to support your movement from the Life Insurance Corporation employees across the country. And I am sure that your movement will gather strength, your movement will gather steam, and ultimately we would succeed in the task that we have taken upon ourselves. You have listed various demands for this convention. A declaration has been presented. I support the declaration. But I am sure that the demands that we have listed in the declaration are not going to be achieved easily. Because the demands that you raise challenge the very government policy. And when you challenge a government policy, that demand is not going to be achieved easily. Therefore, your movement has to develop a sustained struggle, mobilize people not just within the insurance industry but across the country, every section of the people, and try to educate them why are we fighting this government policy. Why this government policy of destroying the general insurance sector is going to impact the entire national development. We had to convince the public it is not so much that we are fighting for our jobs and our wages, but our struggle is a broader struggle in defense of the national development, in defense of the national sovereignty itself. And that is the manner in which that mobilization should take place to gather support from the broadest section of the working, toiling, and progressive sections of the Indian people. Today, for the general insurance sector, the challenges are coming primarily from three sources. Number one, as I said, the government policy itself. Number two, it is coming from the regulatory mechanism developed by the IRDAI. Number three, it is coming from a dynamic competitive situation in the insurance industry. And number four, unfortunately, we have the administration which is, if not unresponsive, is inadequate to meet the challenges that are thrown up by these policies. And that is where our struggle today lies. Now, when we say that the government want to reform the insurance industry, the government want to privatize, we must very clearly understand that the government is going to frame an institution that fits into its agenda of furthering the interests of the classes that it represents. And as Comrade Amarjit Kaur pointed out, today we have got a government that represents the class interest of the big industrialists and the capitalists, both Indian and foreign. And when you support that agenda, it naturally means that you have to weaken and destroy the public sector. And that is exactly what the government has been trying to do it. And in the process, they are trying to create a situation and win over the public opinion by saying that general insurance public sector is inefficient, that general insurance public sector is not doing a good job, and that the government has already started that kind of a campaign. And that campaign, that lies that the government has been telling, has to be countered. The question here is, another member of parliament has come, we'll welcome him. The question is the general insurance industry, and more importantly, the public sector general insurance industry, is doing well or not? I am happy that the members of the parliament are here, 2 members of the parliament, and would expect them to counter this propaganda of the government on the floor of the parliament. For the last several years, the growth of the general insurance industry has been much higher than the global growth of the general insurance industry. Last year, just take the last year, when the global global general insurance industry recorded a growth of around 7%, in India, the public sector general insurance companies recorded on an average a growth of 14%. Today, at a time when the average per capita income, India's global ranking is 128, the general insurance industry global ranking, India's global ranking is 14, which means that much more than the per capita income of this country, the general insurance industry has grown. How do you expect the general insurance industry to grow? Some comrades said about why life insurance was nationalized in 56 and why not the general insurance. The difference is simple. Because life insurance mobilizes the funds for 20 years, 25 years, and that fund is necessary for infrastructure development. But a general insurance industry does not mobilize funds. It gives confidence to the businesses. It covers the risk to the properties. And that is the job that we do, and that is why it was not nationalized when the life insurance industry was nationalized. The question here is the general insurance industry can grow when the number of asset owning people increase. But what is the situation in India? And that is where I am trying to draw your attention, that considering the tremendously low capacity of the people, general insurance industry is still growing in India. It is estimated that the bottom half of the population, 50% of the population, do not have any assets at all. And 83% of the assets are concentrated in the top 10% of the population. And the government survey itself says that only 6% of the Indian households own a car. Whereas for the 50% of the Indian household, their asset for the movement is still a bicycle. Only 11% of the Indian household own a refrigerator. And when the asset owning and a large number of people are still homeless, and when there are not enough asset holding people, classes in this country, still the general insurance industry is growing. And that is what the government should be proud of, rather than denigrating the industry and trying to kill this industry. We say you increase the capacity of the people, give them the enough purchasing power, and we'll do the magic by increasing the insurance penetration. Insurance cannot grow in isolation from the purchasing capacity of the people, the asset owning capacity of the people. Only when the people own the assets, when the people have the capacity to purchase, insurance industry can grow. But the government today ignores this important fact and attacks us. And they say in the general insurance, the penetration is only 1%. And sometimes members of the parliament also will not know what is penetration. With all due humility, I would say when I appeared before the parliamentary committee opposing the insurance sector reforms, a member of the parliament who now is a minister in the government, whose name I do not want to take, he said, why you have life insured only 3% of the population? Then we had to explain 3% insurance penetration means that the amount that we mobilize as premium, which is related to the GDP of the country and not the actual number of people that we have insured. And then I had to tell him that according to the Life Insurance Council, there are 75 crore insurable population in the country out of 130 crore people, and out of which nearly 60 crore have been insured through the life insurance business, and which comes to around 80% of the insurable population. And we told the government, when the life insurance penetration is 3.2%, it is much higher than the United States of America, where the life insurance penetration is 2.7%. It is higher than Germany, where the life insurance penetration is 2.6%. It is higher than Canada, higher than Spain. Then how can you denigrate the insurance industry when it is doing so well? But the government issue is not that. A government today feels that the capitalists, Indian capitalists, have got enough money which they did not have at the time of independence. They want to enter every sector, and the government has to withdraw from all the economic sector it has occupied to help the private corporates to the foreign capital and Indian capital to occupy that space. And that government policy has to be challenged. And we had to tell them why general insurance or life insurance is necessary for national development. Now we already seen that because the consideration is profit, rather than giving public services at an affordable rate to the people, both the LIC and the general insurance, we have neglected certain types of businesses. Earlier we were doing cattle insurance, but today we are not doing it. Hut insurance to give the benefit to the, the most marginalized sections of the people. Today we are not doing it because the concentration is only on profit. But let me tell you, across the world, today, no general insurance company is making profit out of the businesses. Because in insurance, we call it as a combined ratio. That is the expenses that we incur and the claims that we pay, how much that is compared to the premium that we earn. And today, not just the public sector 4 companies, where the combined ratio is more than 100%, which means we are paying claims more than the premium that we earn. Even the private companies, and some of the private companies are having 120% combined ratio, 118% combined ratio, which means we are paying claim which is 20% more than the income that we are earning. And how the insurance companies earn their profit now is only through the investment. And unfortunately, the public sector is not allowed to invest in the manner that it wants to invest. And we know when Comrade Amarjit spoke on Hindenburg report, and so much of problems was there is no public accountability. Compare that to what happened in 1957 when Mundra deal took place. When 1 crore 27 lakh was invested in 6 companies of Haridas Mundra, a industrialist based at Calcutta and a stockbroker. Issue was discussed in the parliament, Feroz Gandhi, and ultimately T.T. Krishnamachari had to resign. He had to resign, and Mundra was sent to jail for 22 years. But today, on Adani, the government does not want to discuss. They do not want to discuss. Forget about punishing them, they do not even want to allow a discussion on the parliament. So on the investment, there is some control. So we earn the profit only through the investment. So these are the issues which are unknown to the general public, or the intellectuals in this country, and our job is to explain it to them. The second issue that we come across is the problem that we are having from the regulator. And every day a new regulation is brought out. And today one regulation which they want to bring a bill in the parliament in the monsoon session to further amend the insurance laws. There some 3 or 4 important issues are there. One, the IRDA is today talking about a composite license, where a life insurance company can do the business of the general insurance also. A general insurance company can do the business of the life insurance also. And that would help the private companies, because a private bank has promoted a life insurance company and a general insurance company. Synergizing their businesses, coming together is not going to be difficult for them. A composite license is given to help the private sector in this country. The second issue that the government is talking about, IRDA is talking about, is to issue a captive license. A captive license means that a insurance company can float its own subsidiary, and that subsidiary can cover the business risk of all that corporate group by itself, which means that other companies will not have an access to that kind of a business. The third change that they want to bring about is in the distribution pattern, that an agent can do the business of 3 life insurance companies, 3 general insurance companies, 3 health insurance companies, and a corporate agent or a banker assurance can do 9 life insurance, 9 general insurance, and 9 health insurance companies' business. And this again is going to hurt the public sector, in the sense that the public sector still is dependent on the individual agents. Take the example of life insurance, 13 lakh agents we have today. And we make lot of investment. A development officer recruits agent, trains that agent, and now you say that agent can do the business of a private company. How is that relevant? And then you also say that IRDA today say on all commission rate we are not going to fix any maximum. Only the maximum expenses ceiling will be there, not on the commission, which means the public sector, which is bound by the parliamentary scrutiny, cannot indulge in any malpractices to pay the commission to the agent, whereas the private companies can do it. They can pay it in various forms. The IRDA is bringing out all these issues, and that threatens. And fourth, importantly, the IRDA today feels that your 57 insurance companies, both in life and general, are insufficient to meet the demand of 140 crore people, and India needs at least 2,000 insurance companies. 2,000 insurance companies. And if you require 2,000 insurance companies, what should you do it? You remove the minimum capital that is required. Now, for any insurance company, whether it is life or general, you require 100 crores of initial capital. And without that initial capital, you cannot come into the business. Now, the IRDA says that minimum capital, which is a regulation framed by the parliament, has to be overwritten. IRDA should be given the permission to decide how much of capital a company needs. That company can come with the business detail, and IRDA would say whether 1 crore capital is required or 2 crore capital is required. Parliament power is taken away. Your power is taken away. IRDA is going to decide how much capital is required for the insurance industry, which clearly means what was the situation obtaining before 1956 is going to come about now. More frauds, more companies, already we have seen it. So these challenges of the IRDA also have to be met. And the third challenge, which is coming from the dynamic market competition. Today, the bulk of the premium that we earn comes from the health insurance. And there is a contradiction there. As a leader of the insurance employees, I want the business. But as a citizen of this country, I said health is my right. Why should I pay for that right? Right? It is the government. When you give me the guarantee of life under Article 21 of the Constitution, you also give me the right to health. And it is the responsibility of the government to take care of my health. But the government today says, we will not give you any rights. You have to insure yourself and protect yourself. And when people are making all efforts, especially after the COVID period. 35% of the general insurance business comes only through health insurance. Health insurance. And companies are being cheated because when there is regulator for everything, there is no regulator for hospitals. There is no regulator for health insurance. For the same treatment, one hospital charges 20,000, another hospital will charge 1,20,000. There is no regulation. And we have been demanding that there should be a regulator for the health sector, but the government does not seem to bother. And health sector is heavily privatized in this country. So when we have experienced that in the health sector we are suffering losses, the public sector, because we insure for a lesser sum assured, whereas the private sector insures a higher sum assured. I don't have the details, but life insurance I have got a detail which may be of interest to our member of the parliament and comrade Amarjit Kaur. The average size of a policy of a life insurance is 26,840. Annual premium that we pay through a policy is 26,840. Whereas in the private sector, it is 1,07,000. Which means that we have to insure the marginalized and the weaker sections of the community, and the private sector corners the business of the higher ends, the richer sections of the people. And the same trend we see in the general insurance in respect of the health. And the second highest business that comes to us is through the motor insurance. And the comrade who introduced this subject, she spoke as to how the private sector makes the profit on the issue of the motor insurance. So this is a issue, the competition is a issue, and that is where we hold the managements of the four companies responsible. They are not meeting this competition adequately. When I book a ticket for air, Comrade Amarjit ticket is booked now, there is a column there whether you want insurance. And every portal has got only private sector, no public sector figures into it. No public sector. Long back when I used to come to Chennai Central Airport, there used to be a small office of Oriental where travel insurance used to be given. Now even that office is closed. So we asked the management of the four companies, why are you not concentrating on the retail type of businesses? Getting the corporate business is easy for you. You have to prove yourself as the leaders developing the retail business, and in the retail business we are not there in the market. Why are we not there in the market? And when you take a loan from State Bank of India, you have to compulsorily purchase a house insurance from State Bank of India. Why are we not entering into some kind of an alliance with the other loans people? These are the aspects where the management is falling short. And when you analyze the entire issue, we find that certain things are necessary for us. Number one, merger. Merger is necessary. And merger is a demand that we raised in the year 2001. Immediately after the insurance sector was opened up, we raised the demand that when you are allowing the private companies to come, we also said once the private companies come, mergers and acquisitions within the private sector is going to take place. And already it is happening. Sahara Life Insurance Company has collapsed. And IRDA is asking State Bank of India to take over that business. And many smaller insurance companies are going to collapse. So they have to either merge or they are going to be acquired by a bigger company. And ultimately in the market, there are going to be 4 or 5 big private companies that will be competing against us. In that kind of a situation, we said it is necessary for the government to merge its companies. And we gave lot of arguments. We said synergies of business. We said control over the expenses. We say better utilization of the tremendous skilled labor force that we have. And at one point, we succeeded in convincing the government that merger is the answer. And at that particular time, the government said 3 companies will merge. But look at the policy flip flops of the government. One day they say we'll merge, the second day they will not merge, we'll privatize, creating a kind of uncertainty. And today, if we have to meet the market dynamism, the competition, the challenges, if the government is keen on protecting the public sector, then merger is an answer. And it gives us a lot of advantages. Advantages which the insurance sector will get, because 245 companies were nationalized and created one single life insurance corporation. Its brand image, its visibility has been there for everybody to see. And according to the reports, LIC's brand and visibility is much more than the State Bank of India. And so much so that many people in this country are not in a position to know what is life insurance and what is non-life insurance. Again, I'll go back to the same thing. When I was appearing before the parliamentary committee, with due respect to my honorable members of the parliament, a member of the parliament said, "You speak so much about your insurance industry, but there is a problem with your servicing." Then we said, "Sir, if there is a problem with the servicing, please give us the detail." I was representing LIC then. "Give us the details. Whatever is your policy problem, we'll get it solved and we'll write to you." Then the member of the parliament said, "My relative's car met with an accident and his claim is not being settled by LIC." Right. This is the knowledge of the people who are going to frame the laws for the insurance industry. So we say a merger is the answer. It is going to add. And secondly, worldwide also, the time when it was there that is small is beautiful, that no longer exists. Every business wants to become big. And when we do not know artificial intelligence today, we have created a machine which is more intellectual than the man itself. And in that kind of a situation, when artificial intelligence, when centralization of all work takes place, there is no point in having 4 companies, government companies doing the same business. So merger is necessary. So for merger, the government is not going to accept that, because ultimately the government want to privatize. And if you merge, you become more powerful. Your movement would become more powerful. And that is where the government is hesitating and not doing it. We want the government to know from its own experience. What is the experience? They merged the banks, right? The idea was India should have only 3 or 4 big banks that can globally compete. They merged the banks. And today they take pride in the fact that today, after the merger of the banks, creating big banks, those banks have become profitable. Their non-performing assets have come down. If your own experience with merger is favorable, why your experience in insurance industry should not be implemented? And that is a political reason. The government does not want to do it. So politically we have to fight. And the second aspect is the perception of the people. Perception, we are having today the youngest population in the world. 65% of our people are born after 1991. They did not know the problems that India had. They did not know how the private sector cheated and created the frauds. They also do not know that many of the public sector banks had to take over the failed private banks. They do not know the history. They know that everything government is bad, everything private is good. That perception war has to be won. That perception war has to be won. And that can be done only through a mass mobilization of the people. You are making a beginning with the conventions, and I've told that basically the conventions are restricted to Tamil Nadu now. I think that your activities should expand. It should expand to all the major cities of the country, and there should be a mobilization of the people, general people, and all the parliamentarians have to be approached with our problems. And when the insurance laws amendment bill comes, we should make them to stand up in the parliament and speak freely and say how disastrous it could be. And that is the task that we must take up through such conventions. So I congratulate you for organizing this convention. I am thankful to the organizers for inviting me. And I also hope that from this convention, our movement would gather and ultimately will force the government to give up their disastrous economic policy and adopt the policy that would be favorable to the common people of this country and will be in the national interest. Thank you, Commissioner.